What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is August 20th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I not only want to spend some time to dive into cryptocurrency markets abroad, but talk about one of the few DeFi plays that I actually think is looking at cheap and interesting in this market where most things are rallying at all-time highs or relative highs for the last few years. And outside of that as well, I want to talk about some major fundamental moves towards layer 2 on the Ethereum network that are going on right now as we start to see the gas fees get to ridiculous levels and really leading to a call of action for a lot of these projects to make the switch to a better framework of technology. We've got a lot more other things to discuss as well as that right after our quick sponsor. Our sponsor for today's episode is Ledin Io. For those of you holding Bitcoin and digital assets long-term like myself, why not put it to work? Ledin works with Genesis, the most established institution in digital assets, to give its retail clients access to a suite of institutional-grade services to manage their digital wealth. Their savings accounts let you earn up some of the best risk-adjusted rates on your digital assets, such as 10% on USDC and 6.5% on your Bitcoin. Their B2X loan service allows you to double the amount of Bitcoin you own through a Bitcoin-backed loan. And if you sign up today, you can get over 250,000 Satoshi bonus if you register with the link below to get a loan today. Alrighty, everyone. So to start off here, let's go ahead and take a look across the board of the market, dive into Bitcoin, and then we'll also dive into the juicy stuff for today. Last 24 hours have shown us that the market leaders are slightly down over the last 24 hours, and the vast majority of the market sitting in the red at the moment as it's following the market leaders. However, at the same time, we still have a lot of plays that are, defying the odds here, that are really still keeping up here. Amisago up 31.8%. We'll talk a little bit about this later on because there is a reason for this. Along with that as well, though, we can see the general trend here: enterprise blockchain, enterprise protocols, or DeFi. Algorand, Utrust, Wire and Finance, Qtum, Flexicoin, Bancor, Aave, Energy Web Token, Synthetics, Blockstack, Cosmos, Ampliforth, Kava, iExecRLC. A lot of these plays fitting into Oracle's enterprise blockchain, DeFi, you name it. Those major categories that we've been talking about on the channel. Many familiar names there. I wanted to talk a little bit about Bitcoin here. I think some people are worried that we've pulled back from, around 12,400 was where we generally hit resistance. And over the last 2 and now working on 3 days now, we've been having red candles going down a little bit below 12,000. Not really too worried about this, guys, because quite frankly, my Bitcoin allocation is not that big right now. I've been focusing mainly on altcoins here over the last few months. And if you take a look here generally at our analysis, taking a look at the weekly here, I generally feel that we're going to be pushing what would be seen as sideways, until we eventually break above this resistance point here back in June of 2019. Really the peak of the wicks, right? We've already gotten above the base end line of the price action here. But really getting above 14K is where we're really going to start to, I think, kick off our continuation of the rally here, going up towards 20K very quickly. So we could be consolidating sideways for some time as we're not expecting to break above 20K until the end of this year to Q1 of next year. Again, keeping our estimates as conservative as possible, focusing on where the moves are happening right now, which is obviously in the altcoin space. Now, I want to go ahead and talk about one of the trades that we actually sent out in the Dash Report Alerts group. We've been getting a lot of signups over the Dash Report, and it's been phenomenal because there's so many things going on, not just in cryptocurrency markets, but in traditional markets and also, commodities and equities and things of the sort that we like to talk about on the channel. But this is one of the trades that we wanted to talk about and one of the interesting DeFi plays that I discussed. I shared it the other day here on Twitter. I like to share a few things on Twitter. If you guys haven't already, definitely consider following me over on Twitter. There's a lot of great material that I put out there, just some general updates, some good kind of thought experiments and stuff. But I put a tweet out talking about Ampliforth, and this has been a DeFi play that a lot of people had brought to me before. I'd kind of brushed it off for a while, not really understanding how Ample worked. And it's been really interesting to kind of learn about how it works as a kind of dynamic asset within the cryptocurrency space. So long story short, I want to go ahead and talk a little bit about the TA, but again, the key thing here, guys, is that before I dive into it, and as I will from time to time kind of share these things with you guys about what I'm interested in, please spend your time to understand what it's about. If you're interested in learning about what Ample is and why I'm eager and interested about it, there's a really great video here that explains this from Finematics. In this case, it does a lot of great explainer videos on DeFi topics. Definitely go check it out. And it talks about how Ampliforth works. And along with that as well, there's a really good summary video here from the actual Ampleforth page that explains one of the key issues with basically the censorship-resistant cryptocurrencies like DAI that are founded by MakerDAO, and the problem that they're finding themselves in the case of not having a basket of different assets to pull in to utilize as collateral that are non-volatile, or at least are aiming to have some kind of peg or stability. So the key thing to understand here when taking a look at Ampleforth is that it is different than other cryptocurrencies when you're analyzing it. You cannot look at the Ample or AMPL chart to Bitcoin, to ETH, to even USD, right? It's not going to be as relevant as looking at market cap. And the reason why is because the supply is dynamic. So when you hold a position in Ample, whether you're staking or you're just holding it in your wallet, the balance of Ample can increase or decrease, and it uses a very similar kind of mechanism some might be familiar with in regards to DAI, for example, where in this case for DAI issuance, in this case, you have these dynamics that basically keep the peg at $1. It's sort of similar in a sense, but in this case, as price goes up, they increase the overall supply in the network. And along with that as well, when you see a decrease in price, in this case, the overall supply decreases as well. So it's supposed to provide pressure of limiting the supply in the market, and vice versa. When price goes up, you have more coins in the market. People are actually, as they're holding it, not only is price going up here, maybe above the peg, but along with that, they're getting extra coins. So in this case, there's a pressure to sell in this case for some. Now again, Ample is a very early project in this case, but the whole goal is to get it to a peg of $1.01, which is basically the CPI 2019 reading for the dollar according to the current rate of the dollar, right? So again, slightly higher than the dollar. That's the peg that Ample's going for. And of course, it doesn't always do that. It's a very early asset, right? But the major thing we want to focus on is obviously market cap, because if the supply is adjusting, we have to factor into market cap here. And what's very interesting is that we've got this descending wedge here that I thought was really interesting to watch. I've been watching this for the past few months here, all the way back since August, right? Or excuse me, the past few weeks, to get my English correct. And been waiting for this descending wedge to break, because a descending wedge is a bullish pattern. A lot of people don't think, hearing the term descending wedge, they think it's a bad thing, but it's actually a very bullish pattern. It's when you have the highs descending at a faster rate than the line of support. And along with this, we have a more detailed analysis. This is what we wrote about within our newsletter, and we distributed out, not so much in actually the newsletter, we sent it out in our Trade Alerts group that's tied to the newsletter. And these were 4 things that had me really optimistic on Ample. Ample being one of the major emerging plays in DeFi. It's had a great pullback in this case, an 80% correction. So when you have these kind of new players coming in that have gone to very nice heights and have had nice pullbacks, again, you want to see these kind of 80% corrections. This is what so many protocols did in the last cycle, and it showcases here that if you can hold at kind of the first significant relative high here on the chart that we would see on the standard chart, then that's really good to see here. This is what we want to see. We want to see those 80% corrections making support on previous resistance, which is exactly what price looks like it's doing right now. The third one is Ample retesting historical resistance, as we just highlighted, and also forming that descending wedge. By now, you guys probably understand my style is much more simpler than most people. And the great thing about it is, as a swing trader, I'm not trying to day trade on really short-term moves, and I can catch these really big moves that if things do play out correctly, we can have some really nice multiples on the market cap. And again, I'm very, very excited to see Ampleforth develop. Who knows? It's like many other cryptocurrency projects. Things can fail, things can succeed. I think that this is one of the more interesting plays, because as someone who does like what MakerDAO is doing, who likes what, for example, Kava is doing, what all these different projects are doing in order to use cryptocurrencies as collateral in order to create a new credit network, in this case, to be able to generate stablecoins off of cryptocurrency assets. I do understand that the current environment of, as one of the founders of the project here, Evan in this case, who's one of the founder of Ampleforth, brings up this really good point. We can't use, USDC and other stable coins that are backed by US dollars in order to generate stable coins in this case. It just doesn't make sense. There's nothing productive of value in this case, and it is censorable, because if USDC, for example, the underlying USD, is abstracted out of that portion of USDC, or for example, that USDC can't end up being used for DAI in this case, well, we haven't found a solution here, right? We've seen that stable coins have, for example, started to censor certain addresses. This kind of kills the point of DAI being a censorship-resistant currency. So again, just keeping that in mind here, I think it's a very interesting topic, and I would definitely recommend people look into it. Give it a chance. It's not aimed at being a stable coin. It's aimed at being an asset that has market incentives to directly correlate back to a dollar inevitably in the future, right? So anyways, thought it'd be interesting to talk about. Now, I wanted to share with you guys some just quick resources. I know I don't really get to talk about it too much on the channel, but if you guys haven't already, join us over at our Discord. We have our Discord group here, the Data Dash community. You're welcome to join in, talk with some of the moderators, the community members. Again, there's a lot of great people here who are still active here on the Data Dash channel, who are chatting it up, sharing ideas. Along with that as well, you can join our Telegram group. This is a great group. We have almost nearly 3,300 people. We've been getting a big bump up in people recently as the market has started to heat up. So again, these are free open discussion groups that you guys can join. We have a great community. That's been my biggest focus from when I started the channel, is to offer the vast majority of things for free, just let people come in and chat. And outside of that as well, as I mentioned again, consider following me on Twitter. Now, let's go ahead and talk about one of the biggest pieces of news that I think, of course, is being talked about, but is not going to get the kind of recognition that it is taking on right now. So let's go ahead and talk about this. So many of you are probably aware of either one of these two projects. Tether, the largest stable coin on the planet right now, nearing about $10 billion in total USDT printed, or digitally printed in that case. But outside of that as well, Omise Go. Omise Go was one of the kind of early stage payments and kind of remittance and cryptocurrency projects that had been discussed about all the way back in 2017. They were a hot project when they hit the market. We talked a lot about them. And it's really interesting to see some of these longer term plays coming together, actually building real reputable solutions here to help with on-chain scalability, bettering their own products. And with Omise Go's work towards Plasma and being able to provide layer 2 scaling for the Ethereum network, they've been able to provide a solution that has convinced Tether to migrate, in this case, towards layer 2. And again, Tether has made moves from many different projects. It was on the Omni network before, then moved to Ether and Tron, and went back more to Ether. And it's gone really back around to a few different networks. And now it's finally gotten to land its spot here on a layer 2 solution that is going to dramatically reduce fees, dramatically reduce on-chain demand in this case. And the important thing about this is to not only see that this is a first major solution here, $10 billion worth of Tether is going, again, in this case, a massive network for payments is going to be migrated slowly but surely over to layer 2. But along with this, this is going to be massive for Ethereum. And I think it's going to be a pivotal point here in showcasing that we are not going to be depending on Ether 2.0 for scaling of the Ether network. It's going to be a ways away until we get ETH 2.0. What's really going to happen here is we're going to see Uniswap, we're going to see Tether, we're going to see other types of DeFi platforms on a standard of working on layer 2 in order to really reach a mass audience in this case that still has yet to come into DeFi. Again, to talk about how important this is right here, the biggest gas user over the last 3 hours here, right? 14.45% of the ETH's network traffic, in this case, the actual consumption of gas, has been Tether. 14.4%, way beyond anything here outside of possibly Uniswap, right? Uniswap and Tether kind of bounce back and forth, but the key point that I want to drive here is that if these two applications can move to layer 2, whether that's optimistic rollups, ZK rollups, Plasma, whatever scaling solution you want to look towards, right? This is going to bring gas fees back down to the healthy levels we were used to, and it can save Ethereum. If these two projects and any new emerging DeFi projects do the same, if it becomes standard, we will not only see DeFi foster, but along with that as well, fees will be non-existent, and along with that as well, it'll buy us the time to get to ETH 2.0. I'm very, very excited about this, guys, and I think you should be too. If you're excited about DeFi or enterprise blockchain, you gotta get excited about this. You have to, because right now gas costs are still too ridiculous for anyone to be making swaps on Uniswap, like everyday people, not VCs, not big accredited investors or longtime crypto holders and whales. I'm talking about everyday people, and it's going to be very, very important for this to happen in the long run. Sorry, I'm getting all like kind of excited about it, but I'm a kid in a candy shop when I see stuff like this. I mean, this is the big tycoon here taking one of the big leaps here. Bitfinex working in this case with Omise Go to actually bring this to life. I think this is very, very fascinating. So I recommend reading through the article here. Again, talks a little bit about the rationale. It's not too long. Just talks broadly about the kind of announcement here and the amount of payment traffic that is going to be moving towards a substantial layer 2 solution. Hats off to the Omise Go project. I know they've been diligent on this for a long time, and they made the move. They got it out there, and they got one of the big players, especially one that needed it more probably than anyone. And if you're talking about sending dollar stable coins, I don't want to pay higher fees than I would pay with my bank, right? So anyways, I think this is going to be fascinating, and it's going to really, really shake up the game here for DeFi. But anyways, I'd like to hear from you all. What do you think is going on? Interesting in the market right now. I want to get that discussion going with you all. But outside of that, everyone, I hope you're having a fantastic day wherever you are, and I'll see you all in the next one. Stay tuned.